Welcome to another Talking Technical show, and tonight I want to kick off with some of the requests that we had because last week we ran out of time. And the first request that I would like to discuss here is Anglo Gold. But remember, you can see today I'm at a different venue, so if the background looks a little bit different, I'm not in my office, but I think the info that I will give you is still the same, although the venue is maybe a little bit different. Well, if we look at Anglo Gold, the viewer wanted to know if he can still hang on to the stock because he's maybe thinking of maybe keeping the dividend if they pay out the dividend, but on the long term he's still positive, but in the meantime he's a little bit nervous. Now, first of all, I would like to take you to a candlestick chart, and this is a daily chart first of all, and this chart tells me that we're probably sitting on a double top formation. Now, a double top formation, as most of the viewers know by now, is a warning formation. Now, if I see a double top like this, I'm always a little bit nervous because the crucial thing is I just want to use this line because the moment I show you this, then the viewer will immediately know what I want to say. Remember, a double top is always a warning formation, but if the double top can break above this top of this candle, and that high is at 191 Rand and 63 cents, then you can easily see that this double top formation gets wiped off the table, and then the share can easily go to 200 Rand or 205 Rand. So I like that. But on the other hand, while it is below this level of 191.63, the possibility of this double top is still in play. So always keep in mind, while it's below this resistance line, you need to be nervous. Now, I first of all want to show you where this double top will be confirmed. Now, this double top will only be confirmed if we get to the low of this candle, and that is at the low of 164. And only below 164 you will get nervous, because then you will say, listen, this double top is a serious threat, and then it can take the share all the way down to this level of 114 Rand. But I want to maybe just show to you this little gap. There's a gap there between 157.47 and 156.35. Now, it can maybe head to that first, but the viewer wanted to know if he can keep the stock. Now, for me, while we're in this consolidation, and if you're happy with your profit, you can still keep the stock. If you're nervous and you start to see that the lows of these candles suddenly gets turned into resistances, so it means that people are keen to sell below, let's call the level 178.80, then you need to get a little bit nervous on the stock and just say to yourself, maybe the stock can surprise you. But let's go to a longer term chart. And I want to take a longer term chart of Anglo Gold. And this is a weekly chart, of course. And I want to show you here that the momentum is still clearly to the upside. So although you may be a little bit nervous on the stock, I just want to do the following. I want to add into a 40-week moving average. And remember, you guys know by now that I love the 40-week moving average. That is the long-term moving average for even the fundamentalists. They like it. Now, let's have a look. The stock definitely ran away all the way. And I mean, just look at where the stock started. And I can remember when we called it on the show just above 100. And in actual fact, I thought that it can maybe get to 100 Rand, but it never got there. And it started to rally. Well, let's have a look at it. This stock had a beautiful rally. So I want to say to the viewer that asked me for Anglo Gold, you can keep the stock. And you need to get nervous when this low, and that is at 167.51. And remember, this is a weekly line chart. Only when it gets below 167.51, you need to get nervous. There's only the other thing that worries me. You see where the 40-week moving average is and where the share price is trading. It's a little bit, the gap for me is maybe a little bit too big. Reason why? We've seen in the past, the moment that any share or any market rallies away from this 40-week average, you get to a point where it really pulls back and it go and test it. And look at these gaps. Even at that period, it fell way below the 40-week moving average. And what happened? It worked all the way up. So just keep this in mind. But I mean, the momentum is still clearly up. And while the stock is above this 167 level, you can hold on to it. And I mean, if you've got a longer term view, just have a look here. I mean, the high was around 310. It went all the way down and it built a beautiful, you can almost say massive consolidation. And now it's starting to move higher. So yes, hold on to it. But as I always say, if you are happy with your profit, take it and go. Because I've never seen any trader in my life, or even a long-term investor, that when he's happy with his profit and he takes it, he stays in the market. When you suddenly realize that you did not take your profit and the share fall below, and you actually nervous and you say, I should have done it, you can maybe quit the market and say, it's an ugly business, I don't like it. And that brings me to another request. And that, of course, is EOH. I mean, EOH is one of those stocks that everybody in the market is talking about. And I mean, EOH is just one of those stocks that is telling us all the way again that you get to a point where you love a company. Like, I mean, Bright in the past, and we can mention Steinhoff, and we can mention Woolworths. And I mean, you can look at all those counters. At one point in a time, they were favorites. Everybody loved them. Nothing could go wrong. And if you heard about the stock, it was just going better and higher. And suddenly, what do we see with EOH? EOH suddenly lose a lot of momentum. Let's maybe just show the viewers here. And remember, this is again a daily chart. Well, August last year, the share was trading close to 50 Rand. And now it's trading close to 20 Rand. I mean, that doesn't look good to me. And if I look at the chart, because the viewer said to me, Frans, I would like to know if I can buy the company. Now, well, let's have a look here. I'm not so sure that you can buy it, because what I see here is I see this ugly candle. And remember, this ugly candle just tells you that there was a lot of sellers around. I mean, you can see the shadow. I mean, the lower end of the shadow was exactly at 1755. I mean, that was the low. And if it was 1755, the shadow tells you, yes, there's people that's buying it. But what I always do, instead of just going in and buy the company, I will always wait for a consolidation here. I will wait for a few candles, maybe a week or two, and before I get into the stock. But remember, there's another thing. I mean, if you miss out on the boat, say for instance, EOH starts to develop a beautiful momentum to the top, and it's just day up and day after that, it just goes up. I just make peace with that. I just say to myself, if that's the case, I'm just going to leave it, because what? There is plenty other stocks in the market that you can buy. I mean, if you miss the boat on one, don't worry about it. You can always buy another stock. So you don't need to get to a point where you say to yourself, I must buy it. It's not the case. You can always get into the stock whenever you want to get into it. Well, first of all, EOH, I think at the moment, wait for a consolidation. Let's just show you what the weekly chart is telling us. And I mean, that will tell you why I say that you must just be patient and wait for a beautiful consolidation before you start thinking of it. And I leave this 40-week moving average on. And what does this chart tell us? This stock is just going down all the way. It has just taken out a new low, and there's the low, the previous low. Let's just show you. I can show you. And that's why I'm negative on the company. I just say to myself, why must I rush into buying the stock? Because it's below that level of 27.94. It's on a new low, and I wonder if it was the all-time low. That I don't know. I didn't check that. But what it tells me is you can just leave it alone. No, it was lower before, around in 2009. But this chart just tells you that it goes all the way down. And you know what was interesting? This chart already warned here with a double top in 2015, 2019, 18. And I don't want to harp on the point. We showed charts of Steinhoff in the past, of Bright in the past, of Woolworths in the past, and all of those charts warned investors long away before the things got ugly. So if you get the warning formation, suddenly you will realize that something is on the boil. And then you must just say to yourself, let's just wait and see what the chart is telling us. And exactly like now, the stock is on a new low. It's trading at 2028. I mean, it's been on these levels in 2009. So I'm at the point of this chart saying, just wait. And I will, in actual fact, be only get confident when it can get above 28 Rand 30 cents. So guys, just leave it alone and just leave it. And I think let's find something else. Now that brings me to the other point. A viewer also asked me about Sibanye. In actual fact, a few viewers asked me, because I called the stock a while back. And I said, listen, I like the chart, not because I think that the company can turn around fundamentally. In actual fact, I was at that point when the chart started to show me that there's things on the go here. I was still a bit nervous on the platinum price. But apart from that, I was still thinking of Sibanye having a lot of debt, and maybe the company can surprise us and actually make a huge loss. But what is this chart telling us? This chart is in a different story. It gives us higher lows all the way. It is above the 40-week moving average, and I want to show you, and this is actually what I want to show you because that's the important part here. I want to show you, and I want to zoom it out here. You sometimes see that on a chart, but on this one, it's a clear example. Can you see this goodbye kiss? It comes back, it touches the 40-week moving average, it bounces off there, and off it goes. This kiss there is what you call a positive goodbye kiss. That is positive. But on the other hand, I want to say now, if you haven't got the stock in your portfolio, wait for this chart to pull back sometime, we don't know when, pull back to the 40-week moving average so that you can get an opportunity to buy the stock. Because I've showed you now before in Anglo Gold, every time that the stock or an index, we know that, just fall way below the 40-week or rallies way above that, look there you can see it as well, there right at the top there. The moment you start seeing that, look at it, the moment it rallies away or it comes back, it always comes back. So be patient, it should give you a little bit of an opportunity. We don't know, because maybe it can just carry on rallying. But for me, technically, if I must make a sound decision, I will say, wait for it to pull back, come back to more or less the levels of around 10 Rand, 30, 11 Rand, if you're lucky, and then you buy it there, because then you've got a tiny stop loss of 943. That's the 40-week moving average. But for the moment, sit on your hands right at that point.